Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 18th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got some economic data coming out today. Philly Fed manufacturing came in slightly lower than expected, but negative 2.8, not very good. We also had initial unemployment claims came in lower than expected. Mortgage delinquencies in line, and natural gas storages came in at negative 158 billion cubic feet, which was in line with expectations. And crude oil inventories came in at 2.1 million barrels versus 3.2 million barrels. So all in all, pretty much benign. As you can see here, crude oil spiked higher this morning. At the end of the day, it's looking like a pretty good sell to me. I was trying to play it this morning. It sold off. I'm looking for a bit of a bounce. It just kind of popped above there, which you don't generally see with crude oil. So it's looking pretty bearish. So this is going to act as a resistance, this $35 a barrel area, and kind of wanted to test that this morning, but failed on that one. On to the NASDAQ. I've been talking about these different lines for the market profile here, and as you can see, the NASDAQ came up, tested that this morning. We were positive early, but now down about 27 points. But these lines are very important going forward, as well as the E-mini S&Ps /ES came up and tested this value area low and failed on that. I even tweeted out yesterday that looked like a pretty good place to sell SPOOs. It was after the market closed, but there's a 15-minute window there after 3 o'clock that you can still trade the futures. I tweeted it out that I was getting short those, covered those right before I came on here. It was a nice little win today, but for an inside day, we've talked about this before. As you can see, right now we are having an inside day. It's very difficult to put on new strategies on these types of days. I don't know if it's just a breathing room for the longs that have gotten long at the end of the day. We also have a lot of overhead supply in this market, so the people that really rode this out and took a lot of heat are probably looking at like this is a really good time to get out, or at least take off some of those positions. So that's what we're kind of seeing today. You got a bit of a juking back and forth, and tomorrow we might see another move higher, or the bulls could take control. Right now, the bears could take control and push us lower. Right now, the bears are in control because we're below those different resistance areas that I talked about. So going forward, we'll have to wait and see what happens today, and tomorrow is probably going to be a real big day for market direction. This is another chart of the E-mini S&Ps. The reason why I pulled this one up, it came up and touched this 50-day moving average and failed on that. So it touched it, came off, which just coincidentally coincides with those other resistance areas that I showed you on the market profile. So that is going to be a very big line in the sand, very big resistance area for the bulls to try and get above and the bears to defend that. Onto a couple of trades that I'm looking, or that I did yesterday. I did YHOO yesterday, so you might be able to even get a little bit better today, but I did the March 31-32 call spread in there and sold it for 29 cents, adding some short deltas to my position. YHOO's kind of a dog and just didn't look very good yesterday. I didn't really foresee this pop today. It got tested, but it started coming off. Not really tested, but it moved higher. So you could probably put that on a little bit better today. I'm looking for some volatility contraction in there on that one as well. Now, these are some trades that I'm looking at taking off. This Twitter trade, I'm at break even right now. I've rolled this out several times. I'm short the 21 puts, but I collected enough credit over time and rolled it the last time into the March down here. I did a market commentary on that, on just rolling it out, keeping that dream alive. And we did pop up today. It was looking really nice, but it was starting to come off a little bit. So I was at break even, thinking I might cover that one, and as well as GoPro, which is a different slide. McDonald's, again, I did this trade thinking it was just going to be like an overnight trade, maybe take 25% of my profit on this because they're naked puts. Been playing around with trying to take that one off today, but it's I think I sold that at around $1. It's trading around 80 some cents. I put an order in at 75 cents early this morning and then canceled it when it started selling off and getting away from me. On to GoPro. GoPro's another one where, as of yesterday, I was right around break even, thinking we were going to cover this gap to 15. That would have been really nice. I would have been slightly net positive on that, somewhere right around right around 13 or 1280, I think, is my break even on that one. So if we get much above that, I'm going to be looking to cover that GoPro, because GoPro I'm not really hugely fond of. I talked about this, that they've got to be very close to being at book value. They've got a lot of inventory. They actually are very popular everywhere you go. You hear people still talking about GoPro. So it still has a bit of a silver lining there. And so unless I can get it up to that 15 area, I might just keep that one on. I haven't put a whole lot of trades on just because, like I said, there's an inside day today, not a whole lot going on. And tomorrow, getting ready, I'm taking this time to just get ready for tomorrow's webinar, which is going to be an iron condors. And that's going to be a really good one. It is one of the basic entry level, I guess, if you will, strategies that a lot of people like to use. The reason why I like to use it, especially for something like GoPro, where it's just trending sideways, or you don't have an assumption on market direction. Like right now, we've had a major move down in the S&Ps that we popped back up about, about 100 points or so. And when you get those big, huge moves, the market has a tendency to start trading sideways. So that'll be a great time to start implementing iron condors. And if you're not a market technician, you're not good at reading the tea leaves, you don't think, and or you don't believe that the market is always going to follow a particular direction, a iron condor is a great way to put that on. And then we're going to do this as a 3-part series, in a sense, where we're going to be talking about iron condors, iron butterflies for these sideways trending markets, or when we don't have an assumption as to market direction. So check that out. You can go to protraderstrategies.com, get signed up for that. That's going to be a really great webinar. Iron condor is probably one of the most used strategies in the options world, just because there's so many different ways you can play around with this iron condor to defend it, to leg into it, if you will. If the market really rallied higher and you sold a call spread, the market comes off a little bit, you can get that iron condor a lot better. So we're going to be talking about different ways to implement that tomorrow. All right, that's all I got for you guys today, other than if you can't take that, take it easy.